What should you know about taxes when buying or owning a property in Greece? If you're preparing to take this exciting step, understanding the tax landscape is key. While it may initially seem complex, once we break it down, you'll find it much easier to manage. I'm Nico. I'm from Taxes at home in Greece, a real estate company with 35 years of experience that has helped thousands of individuals worldwide purchase their dream property in Greece. Subscribe to this channel for exclusive insights into the Greek real estate market, tips on navigating the buying process, and a closer look at what makes living in Greece so special. First things first, when purchasing a property in Greece, there are two main taxes you should be aware of. First of all, the transfer tax. This applies when you buy an existing home or land. It's 3.09% of the purchase price, unless the estimated value of the property, as determined by the tax office, is higher than the purchase price. This is very rarely the case for holiday homes, but it might apply if you buy a cheap apartment in a city like Athens. This tax is payable by the buyer. Second, value-added tax. If you're buying a newly built property, VAT may apply instead of the transfer tax. VAT is 24%. However, the Greek government allows developers to apply for a VAT exemption, which lowers the tax to, remember, 3.09%, like with an existing property. Make sure to confirm this with the seller as part of your planning. These taxes are an important consideration when budgeting for your property purchase. Once you have purchased property, you'll need to account for annual taxes, especially ENFIA, the annual property tax. ENFIA is calculated based on the size, value, and location of your property. It's calculated using a complicated algorithm, but on average, you can expect to pay 3 to 4 euros per built square meter annually. For a 100 square meter property, this is 300 to 400 euros per year. Discounts are available. For example, you can reduce your ENFIA liability by 20% if you insure your property for fire or earthquake risks. Additionally, there's TAP, which is a small municipal tax for garbage collection and other local services. It's typically just a few euros and charged through your electricity bill, so you won't get a separate bill for this. Hiring an accountant can help manage these payments and ensure you stay on top of deadlines. Also, a good accountant will keep you updated if there are changes in tax legislation and your yearly obligations. A Greek accountant typically charges around 150 to 200 euros per year for those services. If you don't rent out your property, you're done. These are all the annual taxes you will have to deal with. If you do decide to rent out your property, either long-term or short-term, your rental income will be taxed as follows. Income up to 12,000 euros is taxed at 15%. Income between 12,001 euros and 35,000 is taxed at 35%. And then income over 35,000 euros is taxed at 45%. These taxes are calculated on the rental income of each owner of the property. This means that there might be a tax benefit if the property has multiple owners, especially with a higher rental income. For instance, if there are two owners, like a married couple, the rental income will be taxed as follows. Income up to 24,000 euros is taxed at 15%. Income between 24,001 euros and 70,000 is taxed at 35%. And then over 70,000 is taxed at 45%. Additionally, from 2024 to the end of 2025, Greece has introduced incentives for property owners who switch from short-term rentals to long-term leases, offering a tax exemption if certain conditions are met. Now, is there anything else I should know about? First of all, it is important to note that currently there is no capital gains tax on the profit from selling property in Greece. So if, let's say, you have bought a property 5 years ago for 250,000 euros and you sell it now for 350,000, you will not have to pay a single euro in taxes in Greece on the 100,000 euro profit that you make. Additionally, the annual taxes I mentioned are for taxes owed in Greece. If you're not a tax resident, you'll need to check with your home country's tax authorities to see if there are any tax obligations for owning property in Greece. Of course, Greece has agreements with most European countries to avoid double taxation, so you won't pay taxes in both countries for the same property or income. In many cases, such as the tax treaty between Greece and the Netherlands, these agreements also cover property taxes. Being aware of these taxes ensures that you're well prepared financially for property ownership or investment in Greece. Understanding property taxes in Greece is a crucial step, whether you're planning to buy a home, rent it out, or manage your finances effectively. If you have more questions, which is fine, or need specific advice, feel free to leave a comment below. And don't forget to check out our other videos for more insights on Greek real estate and property ownership. I'll see you in the next video.